Hello, welcome to the European Open briefing for Thursday, October the 5th. I'm Rafi Bajan, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So we are getting more strong data out of the US. The ISM non-manufacturing PMI rose to a 12-year high in September. This did give the US dollar a bit of a lift, although the dollar hasn't managed to move past those 2.5 months highs from last week. The euro continues to edge up from those lows at the start of the week. We've got the ECB's meeting minutes coming up later in the day. That should attract some attention. But the UK pound has come under renewed attack this morning on Brexit and political uncertainty. We had disappointing retail sales numbers out of Australia, which hurt the Aussie, and in commodities, oil has slipped to 2-week lows on data showing that US exports went up last week. But let's first start with the greenback. We can see against the yen, the dollar is trading around 112.75. Yesterday's ISM non-manufacturing PMI data did lift the greenback, although we can see here in the chart that it wasn't enough to lift the dollar above the 113 level, and similarly the dollar index, although it is firmer, it hasn't managed to break new highs. It's currently trading around 93.50. So yesterday's data was very positive. The ISM non-manufacturing PMI hit a 12-year high of 59.8. Expectations were for 55.5. We also had the ADP employment report, which showed private sector jobs grew at the slowest pace in nearly a year in September, although actually not just the jobs report but the ISM report as well both were distorted by the hurricanes in September. Tomorrow we have the non-farm payrolls report. That's the official jobs numbers for the US economy. That's also expected to indicate a slowdown in jobs growth in September. And given the distortion from the hurricanes, we might not see as much of a reaction to the data tomorrow, unless of course it's way above or below expectations. So the main reason why the US dollar hasn't really been able to advance much after that data on the ISM non-manufacturing PMI is the US Treasury yields are coming off those highs from earlier in the week. That suggests that the expectations of a third rate hike likely to come in December have pretty much been already priced in. So the main thing investors are looking out for is what's going to happen with the tax reforms, whether or not they're going to get approved, and of course who President Trump will appoint as the next Fed chair, whether they're going to be a more hawkish one than Yellen or a more dovish one. So those could potentially be bigger drivers in the coming weeks. Let's move on to the single currency, the euro now. It has been drifting lower in September. It did start to rise up towards the end of September before coming back down again, mainly due to that independence referendum in Catalonia in Spain. The Catalan leader is planning on declaring independence on Monday and wants the EU to mediate the situation. The uncertainty has increased the spread between Spanish and German government bond yields, but overall, although it has also impacted the euro, its impact so far is fairly limited. The bigger focus today will likely be the ECB's account of the September policy meeting, where it's going to be interesting to see in more detail what policymakers were discussing regarding the strengths of the exchange rate and what discussions they held about tapering ahead of the October policy meeting, where an announcement on tapering is expected. Let's have a look at the UK pound now, because the pound fell sharply not a short while ago, dropping to a fresh 3-week low 1.3171 against the US dollar. We are seeing renewed concerns about a hard Brexit, and of course about Theresa May's leadership. Yesterday, Theresa May spoke at the UK Conservative Party conference, where although the senior cabinet members appear to be united behind her, it didn't really do much to calm fears about a leadership challenge, or even perhaps that she herself might decide to resign. So we are seeing the pound slip below the key 1.32 level. Also hurting the pound this morning is a German industry body warning German companies in the UK to make preparations for a possible hard Brexit, although we are seeing some support, mainly yesterday, coming from the services PMI. The UK services PMI index rose to 53.6 in September from 53.2. Expectations were for it to remain unchanged. But given everything else happening with Brexit, so those numbers appear to be overshadowed this morning. Moving on to the Australian dollar, we had weak retail sales numbers out of Australia. Retail sales fell by 0.6% month on month in August. Expectations were for 0.3% increase. Adding to the negative data was a downward revision in the prior months from 0% to minus 0.2%. We're seeing the Aussie move back towards Tuesday's 2.5 months lows, although so far it has managed to hold above the 0.78 level against the dollar. Looking now at oil prices, yesterday we did see a bigger than expected drawdown in US oil inventories in the prior week. They fell by 6 million barrels. Expectations were for a drop of 0.8 million barrels. Gasoline stocks went up, although that was mainly due to a readjustment after the impact of the hurricanes. What impacted the markets more, though, was the EIA report saying that US crude exports rose to fresh record high of almost 2 million barrels per day. So this has once again raised concerns about oversupply in the market. Although the Russian President Vladimir Putin did say yesterday that he expects the upward deal to be extended until the end of 2018, so that may be providing some support to oil prices. We can see US crude has slipped back below the $50 a barrel level, and Brent crude is below $56. Both are at 2-week lows. And finally, looking at today's economic calendar, the main data to look forward to is US factory orders, weekly jobless claims, and trade numbers out of the US, as well as Canadian trade figures. And we're going to have a number of Fed and Bank of England policy members speaking. That's it from me. Thank you very much for watching, and have a great day.